Let's go ahead and get started. Thank you so much for everyone joining us today. We are excited to talk about investing and more purposeful alignment around just investing overall. But we're going to wrap in holistic financial planning into this topic today. Just to give you a little bit of background about myself, my name's Rayoum. I am a partner and director of financial planning at the Financial Enhancement Group. I've been a team member here for 10 years and have been in the industry for this is my 20th year now. So starting to age well in this industry. I've been through a lot of different market cycles, have seen a lot of different planning topics that have evolved over the years. And my impact and my passion is really just helping folks steward the resources that we've been blessed with well. Today, I've got a co-host joining me, Jamie Burton. Jamie has been a longtime team member at the Financial Enhancement Group. She's also a partner with our company. And so, Jamie, I'll go ahead and turn it over to you to introduce yourself, and then we'll
Yeah.
move on into the presentation.
Okay. It's so glad to be with you guys today. Like Aaron said, I am a partner and an advisor primarily in our Lafayette office. If I'm not at work, you can find me typically with my family, and we're usually in the summertime camping or at my parents' lake house, or just busy with all school things once school starts. But along with taking care of the families that I take care of currently, what I'm really passionate about is taking care of women who find themselves suddenly single. So typically, what that looks like is a woman who has lost her husband, and she typically isn't the one who dealt with all of their finances before. So being able to sit down with those women and really helping them through what their finances look like and building up that confidence again so that they're able to move forward after such a terrible loss with that. But super excited to be here with you guys today to walk you through being good stewards of your assets.
Thank you, Jamie. And, working with you for a long number of years, I know you've done a wonderful job with helping those that are in transition from losing someone. It is either you generally by divorce or death, or another unforeseen circumstance. Those are tough conversations, and you do that well. So thank you.
Thank
Um,
you.
just a disclosure, Financial Enhancement Group, the company that we both represent and work for, we are an SEC registered investment advisor, meaning that we manage more than $100 million in assets. The things that we're talking about today are not guaranteed. They're not, the approval's not being given by the SEC. We are just registered with them because we have more than 100 million in assets. A little bit of background about the Financial Enhancement Group. We've been in business since 1997, serving families in 30 some states. We have four offices here in central Indiana, an office in Georgia, and two advisors out in California. So we have a wide network of families that we take care of across 30 some states. One of the things that we work towards and are very upfront about is we are fiduciaries. So that means that we are legally obligated to do what's in your best interest. Today is more for educational purposes. At the end, we will invite you in for a complimentary next steps meeting. That's where we'll review your situation. And what Jamie and I are going to talk about today is really in generalities. When it comes to holistic financial planning, you need to make sure that you're doing it towards your unique situation. I say this a lot in things that we talk about. Financial planning has boxes, it has processes to follow, but what we do here is not a cookie cutter approach because each situation is unique and each family is different. And so we'll talk a little bit about that today. Few upcoming workshops. If you've worked with FEG, if you're one of our current families, thank you for joining us. This next section of our workshops is really going to drill home what we're very passionate about. Outside of the charitable gifting, we do a lot of tax planning for the families that we serve. So we'll talk about tax smart strategies. We'll talk about gifting strategies, and we'll talk about understanding how to read your tax return to build wealth. Some of those things will go into a small deep dive today, but the next three series is really going to unpack the tax landscape. And one thing we'll talk about here in a couple minutes is the difference between tax planning and tax reporting. So those are two very different things, but very important. So join us. September 18th is our next series. We'll be talking about deduction stacking and timing. One of the things that we do here at the Financial Enhancement Group is follow a trademarked process, and that's called our family focus process. We are paying attention to five critical elements at all times. And those five elements are your life after work, the annual tax plan, the investment playbook, risk management and life happens, and legacy planning. So we walk you through all phases of your financial cycle, which is the accumulation, preservation, distribution, all the way through the end of life expectancy, and that is your legacy planning. We wrap that around a financial vision. So all of that's very, very important. We'll talk a little bit more in detail about that today. Today, we're going to be focused a little bit more on the investment playbook side of things, but more around the holistic side. As a disclaimer, Jamie and I were going to go into this topic talking more about biblically responsible investing and socially responsible investing. Those are just difficult topics that can take us down so many different rabbit holes based on opinions and values of people. We do not take those unheard or unseen. It's just not where we wanted to take the top of the conversation today, just because there's so many different opinions on it. If you can find companies that specifically do BRI or SRI, they are out there. It's just you have to look under the hood of every little thing about the company to make sure that they follow those rules and guidelines. So I'm not shying away from it. It's just not where we wanted to take the conversation today. If you would like to have that, we're more than happy to discuss those topics in the future. Couple things, what we're going to cover today. I want to teach you how to steward your investments well. We want to make sure your investments align with your financial plan. Walk through a couple common concerns and myths that we see in practice. Make sure you have alignment in what you're doing and what your advisor's role should be. And if you don't work with an advisor, what your role should be in your financial plan. And then I'd leave you with a couple practical next steps. So it'll take about 35 to 40 minutes to walk through our topics today. And we'll open up at the end with some questions. If you hear Jamie or myself say something that you have a question about, throw that in the chat box on Zoom. Tarna and Jubilee and Jamie and I will be monitoring that. If we can get to it live in real time, we will. If not, we'll save it towards the end and wrap up with questions at the end. So again, thank you so much for joining us, and we'll go ahead and get started. I'm going to turn it over to Jamie to talk about stewarding your investments well.
Yeah. So when we look at stewarding your investments well, this is a conversation that we have pretty regularly with the families that we take care of. Aaron, as an advisor, has the Kingdom Advisor designation, and that really aligns with what we do in the conversations that we have. Being from the Midwest, we tend to have people that we take care of that really align with our values as well. So we really get excited to have this conversation and really align with what does it mean to be a steward of your investments. And really what it is, it's a mindset. Because if you don't have the mindset where you're a steward of your investments, what you're really saying is, these are mine, these are my investments, I own them, they are going to work for me and what it is that I am trying to accomplish. When you have a steward mentality, what you're really saying is, I don't own these assets or these investments. Have been entrusted to take care of these assets. I have to take over the responsibility of what those are going to do, what those are accomplishing. I have to be responsible about it. I have to not just have myself in mind, but other people, other things that I want to make sure that these assets do good things for. So that's one conversation, is responsibility versus ownership. Do you think these assets are just yours, or do you think you're responsible for them and you want to make sure that whatever decisions that you make are going to lead you in the right direction of what it is that you're trying to accomplish with these assets, not just for the benefit of yourself? You really want to make sure that you have wise decision making, because again, it's not yours. It's for others, for other people, for other organizations, for other things that we're trying to do good in the world. It's an impact beyond you. And then when you're making decisions and you know that you're working as a steward, you really have peace of mind, because those decisions are aligning with what it is that you're doing. So you don't have to second guess when markets have volatility or something unexpected happens. That's already aligned for you. So you don't have to make rash decisions. The emotions aren't going to get to you as if you didn't have alignment in what you were doing.
Next thing too is just, as Jamie was saying, stewardship isn't just about the investments themselves. It's not about just the specific portfolio. It's about the whole picture. And so that's where we take the holistic financial planning approach and why we have the five critical elements. And so when we are teaching people to steward things well, you have to start with the why. And the why is different for everybody. Your why is different than mine, that's different than Jamie's, that's different than Jubilee's, probably different than Lisa's. So you really have to start with the why. When we're teaching people to move into your life after work, you then have to move into a different mindset where you start with the end in mind and you're building your financial plan around that. But the stewardship starts with, why am I doing this? What type of impact do I want to have? Do I want to leave these assets to my kids? Do I want to leave an impact to a church or a charity? Do I have specific values and beliefs that I'm passionate about? So really crafting that why. We'll talk a little bit about at the end about having a purpose statement, writing out a purpose statement to help guide you with that decision-making process. Because those decisions that you have not only impact yourself, but it impacts your children, it impacts the heirs, and it also impacts your charitable causes. And so the way to align those types of things is really looking at four areas that we'll talk about right now. Again, stewardship's not about the portfolio. That's what most people want to talk about. It's the fun, the market's going up, we've got a return, the market's going down, we're losing money. Everybody has an inherent nature to focus on that statement value. And I'm not saying that's right or wrong. It's just become part of our nature of, what does that portfolio value say? What does that statement say? That's a good thing to pay attention to, but there's also other things that you need to pay attention to that wrap into holistic financial planning. The first thing we like to talk to people about is making sure you have proper cash flow and budgeting. These are almost cuss words in our industry. I know uh, people don't like to budget. They don't track their dollars. If you're a nerd like me, I do track budgeting through a couple different apps. I think it's fun. I love numbers. But most people that we interact with don't really have a true budget. I'm not saying you have to have that down to the nearest penny, but you should have more money coming in than what you have going out, or else you're going to create problems in the future. So maintaining a budget, and a budget that has purpose, means you can direct those dollars where you want them to go. And so if there's a charitable impact that you want to make, you can make sure that you're tithing, or you can make sure that you're gifting directly, and it's accounted for. You don't want to have to put gifts and charitable things on a credit card. So making sure you have a budget and a plan for those dollars allows you to live within your means and be purposeful with how you're spending. If you're moving into your life after work, like I talked about, from a retirement standpoint, that is one focus area that we will have you plan around is as advisors, we need to know your standard of living. Jamie and I don't care about where those dollars are going per se, but we need to know how much is going out on a monthly basis so that we can accurately help you create a distribution plan. So budgeting is important through all three phases of finance, and it's an important part of the investment side as well, because you can pay yourself first if you have a proper budget. You can direct dollars into the right investment accounts. And so again, budget's the bad necessary or the bad evil word in our field, but it is very, very important. Jamie, I'm
And
gonna bounce it. Go ahead.
I was just going to add to that. This is also where it's really important to have that stewardship statement of what it is that you're trying to accomplish, because you can always see the X's and O's, like what's coming in, what's going out, and if that works, then okay, it works. But if you're not going in there with that purpose of this is what it is that I'm trying to accomplish, and you see what's going out doesn't align with what it is that you're trying to accomplish, then you're not really going with your stewardship plan. You're not paying attention enough to what it is that you want, the good things you want to do with your assets. So being able to match that stewardship statement with the budget and income that you have going on is really where you start being that good steward.
Yep. Jamie, you want to talk a little bit about why risk management's important as well when you're looking to steward?
Yeah. Um, we know that life happens. You have a plan in place and God laughs at your plan. That's what we know. So if if you have, you think you're going to be on a straight road, you're going to be pretty sorely disappointed because life just doesn't happen that way. So we want to make sure that we look at what can happen, what could be the worst case scenario, and how can we protect against that. How do we look and say, it would be really bad if my partner passed early and I'm going to go through all of these funds myself just for living, and then I have nothing left to be able to be a good steward with. So how can I plan against that? How can I make sure I have the proper life insurance in place? What if there's a very good chance that you are going to slip over time mentally, or you could have, I forget what Joe calls it, the where you can't function on your own anymore and you have to have assisted living or somebody coming into your house and you haven't planned for that and that eats away all of your funds and you haven't done any planning for that. You can look and say, okay, if I have this long-term care insurance in place, I don't have to worry about that and my assets can still work well with what it is that I'm trying to accomplish. Um, you just want to make sure that anything that could happen, you are either self-insuring or you have some kind of plan in place to where it's not going to totally blow up the financial plan that you've put in place.
Yeah, and the other thing is to make sure you have a proper emergency fund. As Jamie mentioned, life's not usually a straight and narrow. You go through curves, and having a reserve fund for those unexpected life circumstances is a major thing of making sure you're being a good steward of the assets. Another area that we want to focus on, and I mentioned this earlier, is looking at tax planning, especially from an investment standpoint. You want to know what type of account your investments are in. And so really there's three main different types of accounts. You have your tax deferred account, meaning that you deferred taxes, and at some point later on in the future, usually after 59 and a half, you decide to take money out of that account and you're paying taxes at that time. The other thing would be a Roth IRA where your contributions are after tax. So those dollars have been taxed. The benefit there is it grows tax free. And as long as you're 59 and a half or older, you can distribute it in income tax free as well. And lastly is, a brokerage account or what we call a taxable account. So those types of accounts would push dividends, interest, capital gains onto a tax return. And so really understanding how and what types of accounts you have allows you to do proper tax planning. And it allows us as planners to make sure you're not paying more in necessary and unnecessary taxes. And it allows you more resources in your pocket to put into other areas that are maybe more impactful than going to the IRS. And as I mentioned earlier, tax planning versus tax reporting are two major different things. As advisors, or as a family, or as someone that's not familiar with FEG, if you're not working with someone that's looking at your tax return on an annual basis, they are not understanding your holistic or full financial picture. From a financial planning perspective, most everything should evolve around that tax return. We need to know what your marginal brackets are, so what stair steps you're on. Here in the US, we're on a marginal rate bracket. So as you make more money, the more you pay in federal estate or federal income tax. Um, so understanding that tax planning and tax reporting are different. Tax planning has to be done prior to year end. So any proactive strategies that you put in place more often than not need to be done by December 31st of the year you are accomplishing those tax planning strategies. Tax reporting is doing all of the necessary document reporting to the IRS, whether you do that on your own or work with a tax professional or a CPA. You're collecting all of your statements, providing those to the CPA or yourself, and then reporting what you did that year to the IRS. Those are very critical things as you're looking at how you're stewarding your assets, because you can build gifting strategies around those. You can do a lot of wonderful things working around tax planning. And then lastly is, what type of legacy and estate plan do you have in place? Um, the legacy planning stuff we're not going to focus a whole lot on today because we did that a series ago with Darren. So if you want to go back and reference that, you can. Just know from our perspective, it's not just about the transferring wealth, but you transfer purpose, values, and vision. So if you do proper estate planning and you have proper trust documents, your influence can be extended after you pass. And so you can define what you want your legacy to be. You can define your vision. You can define how you want your heirs to use those assets. And so it's very important from an investment perspective to understand what your goals and wishes are there, because when those dollars start to transfer to the next generation, we have to go back to that slide right here about tax planning, because not all tax dollars are treated equal. So all four of those areas really can play a major and purposeful impact in your holistic financial plan. With that being said, we're going to throw up a quick survey. And the question that we want to know, or the answer we want to know, is, which area do you feel the least confident about in your financial plan? So out of those four things that we talked about would be cash flow and budgeting, risk management, tax planning, estate planning, and legacy planning. Which do you feel the least confident about? We'll wait just a couple, maybe a minute, to see some of the answers come through. As we're doing that, I don't see any questions in the chat. So, Jamie, you and I are covering topics well.
Good.
All right. Right now, 50% of the participants said risk management's an area that they feel the least confident about. It's good to see that cash flow and budgeting has 0 up on the screen. So all of you have a good understanding of cash flow and budgeting. Tax planning, estate planning, those are topics that we're very well versed in. So if you have questions in those areas specifically, throw it in the chat or ask it when we're done. Any more answers coming through, Jubilee?
Nope, that's everyone.
Perfect. All right, let's move on to the next slide. So we're going to give you at least a good understanding of how an advisor should fit into your plan. As Jamie and I mentioned, we focus on the holistic planning first. Then we help you with the alignment of making sure that you're meeting your goals and objectives. So we'll cover those 5 critical elements in a meeting, but more importantly, we want to make sure that you're aligned with your own vision, values, and goals. And before we get into that, there's just a couple things that we see from a practice standpoint, some of the common myths or common concerns when we're looking at, financial planning as a whole is it's just too complex. There's so much information out there. Where do I begin to start? Um, you know, what do I do with this life insurance policy? Do I have enough insurance coverage? If something were to happen to me, am I going to outlive my money? There's so many different changing pieces of the financial landscape. The complexity scares people into inaction. Um, it's all or nothing. So you just get paralyzed by not making a decision. It's okay. Maybe we can't save as much as what we need to start a savings plan, so we just don't do it, or we don't have enough dollars to gift because our budget doesn't allow, so we're just not going to do it. But maybe making small discipline changes in habit or budget could help you get on a better track. And so we see a lot of times people are like, well, it's all or nothing. Can't do it, not going to do it. So I'm not going to start. That's
We've
like me
also
and
seen the
my,
opposite too, where it's like, well, I feel like maybe I have to just gift everything that I have, and but I'm not really thinking about the fact that I need to survive for another 20 more years. So it's all or
yeah,
nothing can be very dangerous. So just being able to have the conversation of what does this balance look like, that's where it's going to get you the farthest, and the money is going to work best for everything that it is you're trying to accomplish.
great point. And then hard to get started. So you just wrap that up with the next one. And then, Jamie, if you want to talk about this, we see this commonly too. There's
Yeah.
no target to shoot for.
Yeah, they are not clear on what it is that stewardship statement looks like for them. So if they just throw $500 here and $100 there, then they just feel like maybe they're not accomplishing what it is they're wanting to accomplish because they're not crystal clear on what they want those assets to do. What charity do they want to impact? What cause? Like what it is specifically that they're going for. So they're just like, well, I just don't know what to do, so it's too complicated. And so just being able to have that conversation and say, what does stewardship mean to you? What is it that you are trying to accomplish? Gets that goal very clear, gets that target set, and then we can actually create a plan that makes sense for them specifically.
Perfect. All right. And so 4 areas to make sure that you're starting down a path of alignment towards your goals, visions, and values is really just starting with your lifestyle alignment. What you're currently doing, is that aligned with the goals and visions and values that you have? Are you saving in the right areas? Are you gifting to the right charities that you're passionate about? We have these conversations all of the time inside of our offices, and we feel more like counselors at some points in time than financial planners because we spend a lot of time uncovering what people are passionate about and making sure that they're aligned with those visions, goals, and values. Um, Once you have those visions, goals, and values set, you really need to start doing regular check-ins. And so that means, does my plan still align with my goals and values? Have my goals and values changed because of a life circumstance? So do I need to adjust something to stay on track? Do I um, need to reevaluate because something major happened? And that allows flexibility. The markets are going to change, life's going to change, priorities change. You have to adapt and be flexible as life and priorities change as well. And then once you have all of those set, it should lead to peace of mind. So when you have that stewardship and purposeful statement done, as you adapt and make changes, you can move forward with confidence. And so knowing that you have a goal, knowing that there's purpose behind that goal, knowing that you have a value statement, and all of that is aligned should provide you peace of mind. Now, where we see some peace of mind start to take a little bit of step back is maybe in different circumstances where the market might fall. The last market correction we saw here was 2022 into 2023. The stock market fell roughly 25% between March of 2022 and September of 2023. And that really starts to question people's ability to maintain their am I on track? Our jobs as advisors is to help give you that peace of mind going through those tough periods of time. They're not comfortable, but as long as you have a plan in place, as long as you stick to that budget that I talked about and know what that budget is, you should have peace of mind when life is throwing you curveballs. So, Jamie, anything you want to add there into the more practical standpoints?
Yeah, we see this in practice pretty regularly. A lot of people have the question, if I start gifting to XYZ charity, is that something that I have to do every year? Do I have to continue doing it? And the answer is no, because we know that things change. We know that your goals can change. Sometimes you're going to a church that really aligned with you, and then they made all these changes and it no longer makes sense for you anymore. Well, then you're probably not going to be tithing to that same church. You're probably going to find somewhere that more fits with you, and then you can adjust that. We see where, somebody that they love gets cancer, and now they really want to start funding cancer research or some other organization that's going to help in that department. We make sure that we have these conversations every year because we have to be able to move and adjust and keep in alignment with what it is that really matters to you and what you want your assets to accomplish. So flexibility, adaptability, it's very, very important when you're being a steward.
Moving into one more survey, and then we'll go into the advisor role, is which area feels most out of alignment for you right now? And what's on the screen is my goals and values aren't clearly defined. My investments don't reflect my goals. My financial plan hasn't been reviewed recently, and I'm not sure where to start. Give just a minute for that to populate. I don't have to answer that, do I, Jubilee? That's on the screen. Okay, so what's come back is goals and values aren't clearly defined. Investments don't reflect my goals. And my financial plan hasn't been reviewed recently. Um, Good news is I'm not sure where to start wasn't answered. So the budget and I'm not sure where to start has been clearly kicked out. So we're talking to a good audience that has a good understanding of their budget and has started on an area of at least some sort of financial planning. So we can help tackle some of those questions on, reviewing your financial plan and any other questions you may have. So moving on to how an advisor should play a part into this is you want to start with your cash flow needs, looking at your overall plan and creating the tax picture that's associated with it. So I did mention earlier that if you're working with an advisor, hopefully they're asking you for your tax return. I cannot wholeheartedly say that enough. In our upcoming workshop series for the next 3 series, you will see why tax planning is so important. So starting with the tax return first gives us the picture of what we're dealing with from a planning standpoint. It allows us to understand your marginal bracket to where your last dollars would be taxed It helps us understand your distribution strategy, your gifting strategy, and what we need to help you with from an income standpoint to help you maintain your standard of living. The other thing we want to know is just the education and options is, as advisors, I said earlier, there shouldn't be a cookie cutter approach to a financial plan. Your situation's unique. You should be presented with different pros and cons, different implementation paths, and different recommendations that give you an ability to reach your goals. It's a lot of times as advisors, it's very product specific. So in the sales world, there's a lot of annuities that are sold. Not that they're a bad product, it's just a tool for the toolbox or the toolkit. Just know that if you're being pitched a lot of different products, just know how those things fit into your financial plan. Our job as advisors should be the education and providing you options through different solutions and not just one size fits all. And then lastly, it's the ongoing monitoring. So making sure that your unique financial journey that changes all the time is still being met with on-track monitoring and on-track alignment. So Jamie, it looked like you were going to say something, so I will pass it over to you.
I was just going to point out that the reason that we say it's not one size fits all and all of our financial plans don't all look the same, it's because when you look at that stewardship plan that you have in place and what it is that you're trying to accomplish, you could have one person that says that they want to see all of their stewardship while they're still living. They want to be able to gift while they're still living, see the fruits of their labor, what it is that they're doing, and that just brings them a lot of joy. And then you can have somebody totally different who says, I'm going to do my regular tithing while I'm still living, but my big gift is going to be when I pass away, and it flows to those places that are close to my heart. Their plans are going to be so different because of the tax planning portion and the legacy planning portion. The assets are going to be coming from totally different places if you're gifting while you're living or when you pass away. There's so many nuances that go to it based on what it is that you're trying to accomplish. So one size fits all just doesn't work.
Perfect. Anything else you want to add?
I don't think so.
Okay, so as we're wrapping up, I told you we would be somewhere in the 35 to 40-minute range. We are right around 35 minutes, so by the time we finish, you'll be able to ask questions if you have them. If not, we'll recap everything and then close for the day. So back to the All right, so practical next steps. What we're looking at here is really a series of three things. So we've talked about it a lot today. Self-reflection, it's the why. There should be a why behind your stewardship and what you're trying to accomplish. Purpose, vision, values, and goals all should be reflected in the why. One thing, if my statement came alive on the front page of the paper, would it be aligned with my personal stewardship statement? That comes from an investing standpoint. Someone mentioned that their investments weren't aligned with their goals. That can be hard to do. Our investment landscape is shrinking year by year. I'm not going to get into a whole lot of that topic, but a lot of the market driven here in the United States has been essentially 7 to 10 stocks over the last 5 years. 20 years ago, when I got into this industry, we had over 8,000 publicly traded stocks. Today, there's a little over 3,000. So the public market is shrinking. And so some of those companies may not be aligned because you're losing the ability to pick companies to invest in from a public standpoint. So if that's you and you want to have some more information or more practical conversation around your investments in your stewardship statement, we're happy to have it. So the second thing is actually create a personal stewardship statement. What does that look like? As I said, define your purpose, your beliefs, your vision, your values. What do you want to have happen with the resources that you've been blessed to steward? What legacy do you want to leave? What charities do you want to impact? How do you want your heirs to handle your estate after you're gone? And if you have questions, you should work with a holistic financial planner. And that is going to be the plug that you should work with a fiduciary. If the person that you're working with does not have your legal best interest at heart and they're not looking at your tax return, you should reconsider who you're working with from a financial planning perspective, because all of the things that we've talked about today are vitally important in your overall planning and holistic plan. So, Jamie, wrapping up, we're going to talk about, we talked about the why, creating a personal stewardship statement, and then working with someone that helps you understand your goals and align with your goals. Anything else you want to add before we move into questions?
I don't think so. Well, I guess, yes, I do. So just knowing when I took a step back and had to do this for myself, it could be a little scary because you do have to really dig into what it is that you're doing currently and ask the questions of, is this really aligned with what it is I'm trying to accomplish? So, do I need to be getting as much coffee as I'm getting, or do I need to buy as much clothes as I'm buying? Does that really align with what it is that you're wanting to accomplish? So it can be a little bit scary, but just know that you're doing it to be a good steward and to get your assets working in the right way that's really aligned with your beliefs and your goals.
Thank you. We'll open it up. If you want to ask a live question, you're more than happy to unmute, ask Jamie and I a question. If you have one that you want to throw in the chat, I didn't see any come through there. So if you have a question that you would like us to answer, we're more than happy. I'll give it a minute or so. And if there are no questions, we'll wrap up with what's happening for our next series, and then we will call it a day. Just give it a minute here. Any live questions? Anyone want to ask a live question? All right, let's move on. So wrapping up, we're going to start our Tax Smart Strategies September 18th. During that, we're going to talk about deductions, stacking, and timing. I'm not going to go into all of the mechanics of that today. I'm going to make you wait until September 18th. Jamie, if someone wants to partner with us or have some questions answered, how do they get a hold of us?
You can always reach us at our phone number, 800-928-4001, on our website at yourlifeafterwork.com. You can request a complimentary next steps meeting there, or send an email to talktofeg@yourlifeafterwork.com, or that little QR code there. That'll get you onto our calendars.
Yeah, as Jamie mentioned, scan that QR code, call us, send us a question through the talk to FEG at yourlifeafterwork.com. Our job here is really to educate. Someone asked, what is our fee structure? I did see that, so I will answer that before we wrap up. We are specifically an asset under management fee structure. We charge by the assets that we can manage, not your net worth. So things that we manage would be like your IRAs, Roth IRAs, brokerage accounts, trust accounts, those types of things. Our initial fee is 1.5%. We have a fee that is from 750,000 to a million's 1.25. Over a million's 1% annually, and then once we get up into 3 million, it goes to 0.85 and up higher. I'm not going to talk about those tier points. If you have questions, we're more than happy to send you our disclosure statement, but we do get paid for assets under management on a annual fee structure. We bill quarterly, so our billing is done quarterly. And it's worked out very well for us. We've got a great company and a lot of families that we take care of. And as we have seen today, we're here to serve. So if you do want to schedule that next steps meeting, call us 800-928-4001. Thank you so much for watching, and we look forward to helping you soon. Have a great day, everyone.